Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, February 10th, 5:03 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. We've got the coveted four green arrows over here as we upgraded market leaders from neutral to grow after the downgrade happened on DeepSeek Monday, and quite a few leaders have recovered from that big gap down, and quite a few acted like it never even happened, as it was pretty much limited to the AI data center theme. So back to grow on leaders. As far as the major indexes against the three time frames that we track, we've got green on short term, 21-day moving average, although mid caps had first close below there. Medium term, also green, small and mid languishing slightly below their 50-day moving average. All indexes above their long-term 200-day moving average. Market never gets into serious trouble unless that level is pierced. So what happened today over the weekend? It started Friday with Trump mentioning tariffs going to go into place. He reiterated it over the weekend. And the thought was for a third straight Monday gap down, but we didn't get it. Futures opened down at 6 p.m. Eastern time, quickly turned green and stayed green overnight, gapped up, and the opening 15-minute low held on the gap. All of that is good news. And so the bottom line, despite the tariffs, gap up holds and leaders acted very well. Here are the numbers. Our 21 over 21 leaders list, 16 up, 5 down, up an average of 1.75%. Again, reiterating that leading stocks have been outperforming. The big eight, seven of the eight up, but Tesla down 3%, drug this to an average of only 0.6% up. RG8 also up 0.6%. S&P 500 up 2/3%, equal weight up about 1/3%. We'll take a look at the rest of the indexes when we go to the charts. Global 60/40 up 0.5%. Our flagship GROTECTION portfolio up 1.13%, led by some of our leading names. Also taking advantage of that index position that we keep that absorbs a lot of the rotation by keeping that and keeps the equity curve smoother. So here's the S&P 500 16-day consolidation we're in. Let's take a look at a 60-minute chart. It's very obvious there. A couple of undercuts, but 16 days up and an inside day today after the negative reversal yesterday. What we're immediately looking for and what the bulls want is a move above Friday's high, because a lot of people are talking about how we continue to make lower highs on the S&P 500, starting with the peak at 60.28. The next attempted rally that was reversed on tariff talk, last Friday's rally that was reversed on tariff talk, inside day today, and over the last 5 days lower, we're making higher lows as well. But if you go out of it, there's kind of a diamond pattern going on here, so we need to see how this resolves itself. I've sometimes bullish, sometimes bearish, but it depends on which side of the pattern is dominating, and for right now it's kind of neutral with that 16-day consolidation that we're in. Let's go to the equal weight S&P and check how tight this has been trading and closing right along the 21, 50, and 8-day moving averages, right at this 180 level. Relative strength has been lagging the last 2 weeks against the equal cap weighted S&P 500. Here's the NASDAQ 100, and if the RSP is lagging, it's because the NASDAQ 100 is outperforming with those big cap, big weights on the S&P 500. So after lagging for about 6 weeks, some promise over the last 3 weeks, despite the fact that some of these names doesn't look very well. And then you've got Tesla, the laggard today, and it's been lagging lately. But a tight inside day on the NASDAQ 100, one of our keys for a while has continued to be, can this and the S&P hold this 21 and 50-day moving averages and continue to climb higher? Let's move on to mid caps. which had been showing relative strength while the Nasdaq was showing weakness, but that was 3 weeks ago, and we've been showing relative weakness on mid caps over the past 4 weeks. Multiple closes, two closes below the 50-day now, two closes below the 21-day as well. Need to hold this 3,200 level and break this downtrend line that has been controlling this chart. Let's go to the Russell 2000. Slightly stronger than the mid caps. Friday, we closed below the 21, recaptured it today just barely. Three closes below the declining 50-day moving average. You can see small caps tried to poke their head out last Thursday, but reversed. There was some tariff talk there as well. More on Thursday, causing the weakness, but a little bit of a bounce up today, though nothing to really write home about. All right, those are the major indexes on inter-asset correlation. We'll start with the VIX. VIX has a 15 handle. We're very happy with that. VIX does its best work under 16. That implies a 1% or less average true or volatility range, average true range on the S&P 500 over the next 30 days. We're also we're at 1.15% right now on the ATR, the S&P 500, and that's dropping too. You'll see that when we get to the tail of the tape. So there's the VIX. How about the US dollar? Had been pulling back 3 days up now after undercutting, but now reclaiming the 50-day and the 21-day moving average. We prefer certainly to see a weaker dollar. A lot of that is tied to tariff talk. Gold making a new all-time high today, up 1.7%. GDX, we are playing this via NUGT, also making a new high off this most recent 6-week rally, coming up to the top of this very nice cup that it's forming. Bitcoin struggled a bit last week, had a strong open today, but couldn't go anywhere. It's below the declining 21, and the 50 is rolling over as well. It's been trading in a tight range over the past 5 days, up 1.7% today, amid very tight trade. Broad bond, basically flat. Long bond, TLT, down a bit, which means a slight tick up on 30-year, as you can see there, and the 10-year slight tick up as well. That's our inter-asset correlation. Let's go to the tail of the tape and hit the highlights. Stochastics, only the S&P 500 pointed up, but we're seeing a pause on a few of the other indexes. The RG8's got 4 up and 4 down. NASI up is a good thing. Dollar and rates holding the most recent pullback, that's green, and neutral on percent of stocks in the S&P above the 5-day moving average. VIX, very nice, as I mentioned. Some news tomorrow. Powell testifies. I think it's in Congress. He starts talking about 10 o'clock, and there'll be some Q&A. And then we've got CPI on Wednesday, keeping a close eye on that. Keys coming into today, S&P and the Nasdaq against their 21 and 50, both above there. Russell 2000, basically right on the 21-day, but still below the 50-day moving average. 16-day consolidation, as I mentioned, back above the 8-day moving average after closing Friday below it on the S&P 500, and 5 days above the 21-day. Our expectations remain positive as long as the S&P and the Nasdaq 100 stay above their 21-day moving averages. As far as sectors went today, 9 out of 11 of the spider sectors up. Gold and gold stocks up. Semiconductors up. Software of all kinds up. That's IGV is big cap software. CLOU and WCLD are cloud software ETFs. Those are up nicely as well. And CIBR is cybersecurity, also up nicely. On the downside, banks, XLF Financials, XLV Healthcare, and Biotech. From a portfolio standpoint, added another small add to Kava, and continued strong action after a firm's gap up on Friday. Took 2 small pilot buys in that as well. Did not update these. RVAB is 1.51. and it is 5.19 to the downside. Our Revere estimated balance at risk. This is if all of our stops would get hit. But the bottom line on the day, despite more tariff threats, gap up holds, leader strong, same keys as today going into tomorrow. And of course, we've got Powell as a catalyst as well. Let's go to the 21 over 21 list. We'll start with the 8 that we own. Palantir has been it paused for one day, and then took off, made a higher high on day 3, made a higher high each of the last 2 days as well, looking like it wants to continue its leadership position. Very nice little handle being put in on Kava here. They've got earnings in 3 weeks. Reddit continues to just make higher highs little by little. Bros 2-day pullback, volume slightly above average today. Not sure what that was about, but pretty tight range that it traded in. Hood continues to make higher highs as well. Snow, nice tight 5-day action here after coming up to the top of this cup base. Got our eye on adding to this on strength above this, the highs of the last 4 or 5 days. And CEG making another high. This is one that got beat up pretty bad on 2 weeks ago on DeepSeek Monday, but it's made a very nice comeback, bouncing off the 50-day moving average. Despite the appearance that it's wedging, the last 4 days have held the 8-day moving average and continues to climb higher. And then Affirm, which we added to today after the very nice earnings gap up last week. Another plus for the market is there have been like 4 or 5 earnings gaps that have made higher highs since Friday. And another one today, MNDY, software name, closed in the upper third of its range, almost 600% above average volume, up 26% on the day. Let's go to the rest of the 2121 that we don't own but are continuing to hold up very well. EQT was another one of those names that gapped down as it's tied to the data center theme as nat gas play, but it's regained pretty much all of that loss now. Cyber continues to make higher highs. Twilio, beautiful tight action here. Like to see it move out above 150 on some volume, but it's got earnings in 3 days. However, earnings have mostly been de-risked by this gap up that it had on a preliminary announcement and just going tight sideways since then. AEM, one of the leading gold names, has earnings in 3 days as that whole sector continues to look good. Dash, a little bit of a pullback into the 8 EMA today. That has earnings tomorrow. AppLovin has earnings on Wednesday. That's going to be about an 18% expected move on this extremely volatile name. We're not in it. HWM, I'm not in it. They may be in it in Turbo. I'm not sure. HWM going sideways. TKO, 2 nice volume days the last 2 days. And look at the insider buying over the last quarter. IBKR, brief little pullback here. Zillow, right at the top of this cup base, that also has earnings tomorrow. SE hanging tight over the last week. Team tight after its gap up on earnings. And HIMS, volatile one, about a 9% ATR. Be prepared if you've got it, but now showing power from the pivot up 31% since its breakout from this cup base. And that is the 21 over 21 for this week. As always, like to hear from me. My email is don@revereasset.com. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION. It's designed to grow assets during uptrends, protect them in a major way during downtrends. We lighten up during market pullbacks. You never know when a market pullback that's 5 or 8% could turn into a full-fledged bear market, but that doesn't happen unless you break below this big black line. Don't let any of the fear mongers out there, pay zero attention to them. The only time to be majorly on guard from an index perspective is on a break of this big black line, the 200-day moving average, also the 40-week moving average on a weekly chart. Until then, just let the people that say the sky is falling, just let them scream into the abyss. And with that, I will wrap it for Monday, February 10th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Reveritas, nothing but the market truths here at Revere. Thanks for listening and have a great day.